can see time is around 5:41. Let's look into Nifty 50 as well as Bank Nifty trade analysis. First, let's look into Bank Nifty, guys. Today is Sensex expiry also. I have captured a hero zero trade in this momentum, which I have posted you on live trade analysis. And I recommend you to go and watch that video, guys, before you watch this video. Here you can see that the market gapped up and showed some kind of selling momentum towards the downside. But in case if the market bias was towards the downside, guys, the market broke the structure. The first candle's low, rejected price from the mid of the first candle, and even this 5-minute zone also. So in case the market sentiment here would have been bearish, the market clearly broke this low, even broke this low as well. You can see this low over here clearly showed some kind of break of structure and a clear bearish sign over here. You can see a clear bearish momentum breaking the 200 moving average towards the downside. And in case of the market sentiment would have been bearish, the market would have retraced to this VWAP levels, the day VWAP level, and continue further selling towards the downside. This is how usually the market behaves in case the market sentiment would have been bearish. Or if you plot the swing high to this swing low, you can see this is the 5-minute zone as well, or the optimum trade entry over here, or the 0.38 level. You could have expected some kind of rejection of price from this level. And this kind of momentum towards the upside is not expected, guys, in case if the market sentiment would have been bearish. You can see the market here taking support from the 200 moving average, the 9 as well as the 21 moving average, and this candle which broke towards the upside changed the whole perspective of market being bearish to bullish, guys. You can see the market rejected price from these levels and closed between this range. So you could have expected the next candle to break this low. But here you can see the market came all the way to this low and closed above this range, guys. You can see clearly signifying bullishness. And this one candle, which changed the whole sentiment from here, the market sentiment from being bearish to bullish. So what you could have done is to enter long position of this candle itself, guys, and keeping your stop loss just above that candle itself. And in case if you try to plot the anchor VWAP level, you can see the market is rejecting price from this level as well, clearly signifying some sort of bullishness. You can see market rejected price from the anchor VWAP level, the 21 moving average, the 9 moving average, and closed above the VWAP level, clearly signifying bullishness, guys. This candle, and you could have waited for another candle for better confirmation, and you can see the market clearly broke the VWAP level and closed above the VWAP level, clearly signifying bullishness. And if you consider this swing momentum, the low of this candle to high of this candle, you can see the market again retracing to 50 levels of this swing momentum, which broke this high, the rejection candle high, and the market consolidated before it broke towards the upside. And you can see how the market aggressively went bullish, guys. You can see the market continuously was very bullish. So you could have just hold it, kept your stop loss below this consolidation level, and you could have targeted towards the upside. And for target levels, you could have used this swing momentum. The high to low of this candle is where you could have used, and you could have targeted the 2.68 level. You can see exactly the market came all the way to this 2.6 level over here. And this is how you could have targeted it, guys. I hope you're understanding what I'm saying. This is the best entry where you could have taken. This one candle, guys, when you learn to analyze the candlestick formation, you can see the market showing some kind of bearish momentum, and the market retraced here, rejected price from these levels, and would have continued further selling. And I have posted you on my live trade that after seeing this kind rejection candle, I expected the market to continue further, and I have entered short, guys. But as soon as this candle formation only, I exited my short position and I took long position because this candle changed the whole sentiment from market being bearish to bullish. So if you want to go watch my live trade analysis, I have posted you at this moment only at 9:24 exactly, where I told you I'm entering short position, keeping my stop loss just above that candle. As soon as the market shows rejection of price from these levels and closed above within this range, guys, I told you that it's better to exit and look for long position only. So this kind of market mentality is very important, guys. The moment when you realize that you have taken a wrong trade, you should cut at that second itself, guys. And you should never be in a hope that okay, the market might move in my favor, guys. That's never gonna happen. You should always be very brutal with your stop losses and trade based upon your risk to reward ratio. And once if the stop loss has been hit, you should exit your position, guys, and you should never keep that hope in market that okay, the market might reverse. So you can see the market clearly broke this structure high as well. You can see a clear break of structure here. So you consider this swing momentum, clear break of structure. And if you consider the common point between this to the common point between this, you can see the price retracing to 0.38 level over here, clearly indicating some sort of bullishness. And after the market retracement to 0.38 level, the market broke this level with a huge impulsive candle and engulfing pattern over here. So in case if you might have added on to your position, you could have taken long position here also after this kind of bullish candle, keeping your stop loss just below that candle itself, guys. And for target levels, you could have used this web extinction levels, the common point between this to the common point between this to the common point between this. This is where you could have used it, and you could have targeted the 100% move, the 1.68 level, or you can see you could have easily targeted the 2.6 level here as well. So this was a very good trade setup where you could have taken long position here, guys. And this was one other add-on position where you could have taken. And after seeing this swing momentum over here, if you try to plot the low common point between this to the common point between this, the market didn't retrace to 0.38 level, guys. And you can't consider this to be a retracement because of this impulsive momentum, the market minimum has to retrace to 0.38 level. Only then we can consider it to be a retracement. If the market didn't retrace to 0.38 level, we can consider this whole swing as a single swing only. And you can see the market here broke this structure high as well, but market failed to sustain this high and rejected price from that levels and continued further selling. So let's try to take this out, guys. You can see there was two trade setups where you could have entered. I told you to enter here, guys. In my trade analysis, definitely have showed you this trade, taking my position long at around, but this I've showed it in Nifty 50, but definitely you could have taken in Bank Nifty also because you can see this kind of candle which formed happened in both Nifty as well as Bank Nifty also. And this trade analysis, guys, here, this swing momentum, let me explain in Nifty 50 because here the price action is not as better followed compared to Bank Nifty. But here in Nifty 50, you can see this swing momentum over here at the same time where the market clearly broke the structure low here. You can see this was not a clear break of structure, guys, but you can consider this to be a chalk formation. And what you can consider is that this swing momentum over here, the common point between this to the common point between this, you can see the market retracing to the optimum trade entry over here. This was the optimum trade entry, which I have marked you in my live trade analysis, and there was a fair value gap above as well. So you could have expected the market to come and mitigate this fair value as well as the order block level. So this was the fair value gap. You can see the market mitigating this fair value gap and the order block level. This is a clear 1 minute order block level. So this impulsive momentum, you can consider this impulsive momentum which broke this low. So even though if you might have not had a conviction to take the trade, as you can see the trend line liquidity over here, and this candle which broke the 9 as well as 21 moving average. And if you try to plot the anchor gap level, you can see this candle over here broke the anchor gap level towards the downside, the 21 moving average, the 9 moving average. So after this candle formation only, you could have taken short position, guys, but I have taken somewhere around here, short position, expecting the market to go further towards the downside. And after this candle formation, you could have kept your stop loss just above that candle itself and targeting it all the way to downside. And for target levels, guys, you could have drawn the fib extinction levels, the common point between this to the common point between this to the common point between this, and you could have targeted all the way to 2.6 level over here. This was the 2.661 level where you could have targeted it all the way towards the downside. So, or the 200 moving average or the daily VWAP level. What I expected here is that there was some fair value gap here, guys. So I have marked it on my live trade analysis. So what I expected the market to come to this fair value gap, mitigate these zones and further continue bullish, but the market failed to come all the way to this fair value gap, instead form a bullish engulfing pattern. But you can see later the market came all the way to this fair value gap, mitigated this zone as well. And if you consider this impulsive momentum towards the downside, so the high of this candle to the common point to the low of this candle. So let's try to mark the high of this candle. You can see the market here came all the way to this the fair value gap over here. The market after this kind of aggressive selling, guys, the market would retrace, but definitely the market here formed a break of structure towards the upside. But here the market compared to this selling pressure, this buying pressure is not strong enough. So what we can expect is that the market would come to the discount areas here. So this is a 50 level. So the market would come mitigate this discount areas as there is a lot of fair value gap over here. You can see this fair value gap here. The market came all the way to this optimum trade entry zone over here, mitigated these levels and continued further selling towards the downside. And you can see how the market came all the way towards the downside. And if you try to plot the fib extinction levels over here, the common point between this to the common point between this to the common point between this, you could have targeted it all the way to 100% move over here. You can see this was the 100% move towards the downside. Or The next target would have been 1.68 level, but here the market didn't reach. So the midpoint between 100% and the 1.68 level, the 0.5 level is where you could have target. See, this is the 0.5 level. So you can see after this kind of momentum, the price rejecting from these levels, guys. I hope you're understanding what I'm saying. This kind of aggressive selling over here, the market after this kind of huge bullish candle mitigated this fair value gap and broke the structure towards the downside. You can see a clear break of structure. After this break of structure, you could have plotted the 50 levels or the fair value gaps or any of that sort. You can see the market came, mitigated this fair value gap over here or the 50 levels. You can see this is the 50 levels where the market came and mitigated and clearly again broke structure towards the downside. You could have either entered. This is another break of structure, guys. You could have either entered at this 50 levels, keeping your stop loss just above that candle itself and targeting it towards the downside, keeping your stop loss just above that previous candle, I guess. Or you could have entered after this kind of bearish momentum, guys. You can see the high of this candle to the low of this candle. You can see again the market came, mitigated this 50 levels over here, or you can count it as the 50 levels here, the rejection of price from 21 moving average. You can see this is, or you can consider the optimum trade entry zone, guys. Since there was a fair value gap here, I will definitely show you. Wait a second. This is the optimum trade entry, and which is in confluence with this fair value gap over here. You can see. I hope you're understanding, guys. The fair value gap, this three candle which broke this low, there is a fair value gap over here. The market came, mitigated this fair value gap. You could have entered as soon as that position has formed, keeping your stop loss just above that candle itself, and you could have targeted it towards the downside. For the first fib extinction levels, what you could have done is to mark the fib extinction levels, the count point between this to the count point between that. So you could have targeted to the 1.68 level over here. You can see this is the 1.68 level, or if you might have holded on to your position, you can see the market came all the way to 4.26 level. Okay, I hope you're understanding, guys. You can see the market is in confluence with 4.26 level as well, clearly indicating bearishness. So in case if you might have entered position, you could have tried your stop loss all the way to this low over here. You can see exactly the market came all the way to 4.26 level. Or in case if you might, this level here is this candle over here. So came all the way to 4.26 level. Or in case if you might have entered after this swing momentum over here, after this break of structure, the retracement level. So in case if you try to plot the fib extinction levels of this momentum, the component in this to the component in this. So you could have targeted, which is here, guys, the 2.6 level. Here you can see everything is in confluence here. The 2.68 level over here, the 4.26 level, the 0.5 levels of this impulsive momentum. So I hope you're understanding what I'm saying. This zone was an important zone over here, as you can see. And consider this zone over here. This is a clear demand, or you can consider supply zone over here. You can see the market came all the way to this zone over here. So short position here, trailing your stop loss. So this is how you could have traded it, guys. And you can see rejection of price from this anchor gap level here, where market failed to make an higher high, again came down. Here you can see rejection of price from this 200 moving average, aggressive sold towards the downside, even closed below this low as well. And again, rejected price and aggressively sold. There were a lot of positions where you could have taken here as well, guys. But what I'm teaching you is to take trades based upon a very good risk to reward ratio. But here you can see there is no imbalance over here. Only here there was some sort of imbalance where the market aggressively sold towards the downside, where the market formed an order block level. So you can see this is a clear 1 minute order block where the market came, mitigated this order block and continued further selling. So you could have even taken position over here, expecting the market to go further towards the downside as well. And if you see the market at 50 levels, the 5 minute zone also respecting here, the 50 levels also respecting mid of the first candle respecting here, as well as the 5 minute zone. And coming to morning trade in Nifty 50, and I will be going back to Bank Nifty, guys. Here you can see, I told you that after seeing this bearish candle, I took a long short position, guys. In my, I haven't posted this video, the live trade analysis of this candle, but I have that video, guys. But I didn't post it because it was too lengthy over here. You can see there was so much. It was around 2.5 hour video, so I didn't. I recorded it, but it was very difficult for me to edit it. But as soon as I take short position, guys, and I saw this rejection and closing above this candle, I exited my position. I didn't even wait for this candle to be broken towards the upside. And clearly, you can see the market broke towards the upside and taking support from this 200 moving average, the day VWAP level, the 21 moving average, as well as the 9 moving average, clearly signifying bullishness, guys. I hope you're understanding what I'm saying. And you can see how the market here showed a very good momentum towards the upside. And I have taken long position here, keeping my stop loss just below that candle itself over here. This is where I have to, or you can consider this candle over here. This candle will change the market sentiment from being bearish to bullish. And initially, guys, for this swing momentum, what I have plotted is to plot the Fib extinction levels over here, the common point between this to the common point between this to the common point between this. So you can see you could have made a very small scalp over here, the 1.68 level, where you could have targeted it. And after this, the market kind of moved sideways and showed some kind of reversal. But again, here it took support over here. And if you consider this impulsive momentum towards the upside, so if you consider the last down candle to the last up candle, you can see again price taking support from this optimum trade entry zone, guys, the 0.05 and 0.78 level, which I have marked you. This is the optimum trade entry. This is a very good area for you to take long position, as well as there was 200 moving average support, as well as daily VWAP level. What I expected is that there would be a bullish candle towards the upside. I would enter long position, but you can see that it was a very huge bullish candle. So what was it is to take position here itself, keeping a stop loss just below that candle. And for target levels, guys, what you could have done is to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this. You can see you could have targeted it all the way to 1.68 level over here. This was the 1.68 level, which you could have targeted it, guys. It was as simple as it is. I hope you understand, guys, what I'm saying. And this is about my Nifty 50 trade analysis. You can even take short position, guys, but looking at this kind of momentum over here, as it was an expiry day, you can see you couldn't have traded, guys, because you could have expected market. This was for only for option sellers day, not for option buyers. But coming back to Bank Nifty, guys, why I have shifted is because here the price action was not as clear compared to Nifty 50. So whether you need to take a long position or short position, it would have been difficult. But for me, it's not difficult, guys, because I know how the market behaves. Whenever you find this kind of sloping pattern, guys, here, this market showing this kind of sloping pattern, definitely the market is bearish, guys. I have observed this pattern over here. Whenever you find some kind of sloping pattern after the market showing some kind of reversal, there is a high tendency that the market might reverse over here. But the market failed to break this low. But here you can see the market showed some kind of bearish momentum over here, where the market even broke this low as well. You can see the market here showed some kind of retracement, broke structure, again took support from 21 moving average, should have further made a higher high. Instead, the market broke structure towards the downside, clearly indicating some sort of bearishness. You can see clear break of structure is. And you can see after this kind of huge bullish momentum, followed by another bearish candle, and the market showing small consolidation candles in this pattern formation. You can see below below this bearish candle, clearly signifying bearishness. Or if you try to plot the anchor wave up level at this level, you can see the market rejecting price here, rejecting price here. What you could have done is to take short position after this kind of bearish candle, or looking at this trend line liquidity over here being broken towards the downside. Taken short position here, keeping your stop loss just above that target candle itself and targeting it all the way to the order block level here, or the VWAP level, or the 200 moving average is where you could have targeted it, guys. So I hope you're understanding what I'm saying. This is how you could have targeted it and taken a short position here. There is only one confluence for you to take short position over here, and that is this candle over here. And you see the aggressive selling towards the downside. If you try to plot the common point between this, with the common point between that, you can see you could have marked the optimum trade entry zone. This is the optimum trade entry, where the market didn't mitigate this optimum trade entry, guys, but here the market came and mitigated the optimum trade entry and further continued towards the downside. So for target levels, if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, so you could have targeted it all the way to this 100% move, guys. Exactly. I hope you're understanding where exactly the market came. The short position here is keeping your stop loss just above that candle itself and targeting it all the way to this. Here, the market mitigated this fair value gap here, guys. So if you consider this swing momentum over here to this low over here, you can see the market came all the way and mitigated this fair value gap, but definitely there was another imbalance over here as well. So even though the market sentiment would have been bearish here, the market failed to make a lower low here after seeing this kind of huge bullish momentum. only the market mitigated this fair value gap over here. And you can see the fair value gap over here was being mitigated but failed to make a lower low. Instead, the market continued towards the upside. Again, mitigated this optimum trade entry zone and continued further all the way to this 100% move. So you could have taken long position, short position here, guys, after this kind of bearish candle. Or what you could have done is to plot your anchor gap level of the swing high. And you can see the market here rejecting price from this level. So if you consider this swing momentum over here, the common point between this to the common point between this, again the market retraced all the way to this optimum trade entry zone over here. You can see in a smaller time frame base I'm explaining. You can see, and there was fair value gap in confluence over here. You can see this is the fair value gap over here, where the market mitigated this fair value gap as well. The fair value gap the market mitigated. So what you could have done is to plot the fib extinction levels, the common point between this to the common point between this to the high of this candle. So you could have targeted it all the way to 1.68 level in case if you might have entered short position after seeing this candle over here. As you can see this zone over here, keeping your stop loss just above that candle itself, above that fair value gap only, you can see, and targeting it all the way towards the 1.68 level. This was another entry where you could have added on to your trade. So I hope you understand, guys. In case if you want to understand it, you should clearly go and watch my videos. Clearly, guys, you can see the market formed H out. That's why the market mitigated and continued further towards the upside. There was fair value gap here, so you could have targeted the market, even though the market formed an order block level here, guys. You can see the large down candle, the market formed an order block. But here the market again broke structure towards the downside because there was a fair value gap here below the order block, clearly indicating some sort of bullishness. So the market came mitigated this order block, the fair value gap over here, and continued further bullish here. So you could have targeted it all the way to this zone as well. And that's it about my Bank Nifty as well as Nifty 50 trade analysis, guys. So you can see market trading above the pivot levels, the daily pivot levels, clearly signifying bullishness. So you should always look for a long trade only, guys. In case if the market is trading below the pivot levels, only then you should look for short trades. And that's it, guys. That's it. I hope you're understanding. In case if you find my videos helpful, please like, share, and comment. Share with your friends and family as well, guys. Keep supporting my YouTube channel, and Instagram is the way to go. You can message me over there. I would be glad to help you out. If anyone of you are interested in learning from me as well, I would definitely help you guys to teach you as well. So you can message me over there, guys. Thank you.